Hi, this is Mike Maloney, and I want to call your attention to the top story of the front page on goldsilver.com. This is Cameron's news, by the way. Cameron is my best friend of more than 50 years, and he puts this up every day and goes through all these stories all over the world, day and night. And anyway, Morgan Stanley, U.S. economy may drop as much as 38%. Now, they're not talking about this year or the total drop over a period of time. They're talking about this quarter. So they're talking about April, May, June. That's what we're talking about, a close to 40% contraction. I have a feeling it'll probably be 40% or something. You can't shut off the world economy and just expect it to bounce back. By the way, the Congressional Budget Office, these guys that are always wrong, the Congressional Bozo's Office, I call it, the CBO, they say it'll be at least 28%, could be much larger. So they're at least leaning toward being correct this time, giving honest estimates. But the pundits on Wall Street, the administration, a lot of economists, people are saying that this is going to be a V bounce. Baloney. It's not going to, the economy isn't just going to snap back after this. An event like this takes years to recover from. After the 1929 stock market crash, we didn't get back to normal basically until the 50s. And so this is going to take years to recover from. If you didn't watch yesterday's video, go and watch it because it's very important about the unemployment and the math that's in there that shows that reduced economic prosperity. So when your income goes down and you're able to buy less goods and services, your lifetime isn't as long, and it's the equivalent. We're going to extinguish the amount of human lifetime that'll be equivalent to potentially killing 22 million people, not because of coronavirus, but because of the economic slowdown. And what they have to do is make it illegal for anybody to be in public without a mask on. Mask, eyewear, gloves. The countries that are implementing this, but leaving their economies open, are being successful at flattening the curve, stopping the spread so that it isn't as quick and so that it doesn't overwhelm the hospitals. So that's the way to do it. We need to ask our politicians, open the economy, but slow the spread of the virus, because what's going to happen is everybody might survive, or most of us, through this virus, a lot more people, but is it going to be a world that they're going to want to live in afterwards? I can't wrap my head around what kind of world this is going to be. On the radar, this is a tweet to John Hussman from Rudy Havenstein. The initial blame, he's quoting John Hussman here, the initial blame will be directed at whatever immediately accompanies the downturn. If a market collapse happens to fall on the same day an organ grinder's monkey throws a coconut at the bronze bull on Wall Street, they're going to blame the crash on the monkey. It's so true. Thank you, John. The true object deserving of blame will be the thing that made a financial collapse inevitable in the first place. He's saying inevitable just like I have been saying that this is absolutely inevitable. When they manipulate, it stores energy that has to be released sometime or another, and it's released in the opposite direction, and it usually comes as some vicious move that just takes everybody by surprise. The yield-seeking carnival speculation engineered by the Bernanke-Yellen Fed is the culprit here. And it got started by Ben Bernanke and this reckless, Keynesian, arrogant manipulation of the economy. This whole thing, the coronavirus, this would have put a big dent in the global economy. But pumping the entire world into massive bubbles, and then coronavirus on top of it, this is going to be something that is just going to be absolutely devastating for the economy, and more than half of it was the fault of one person, Ben Bernanke. You can lay the blame for where we're going directly on his shoulders. So speaking of John Hussman and those charts that were in that tweet, I'm going to show you what those charts were and how they work. This is what I call the Hussman indicator. It's from a seminar, online seminar that I gave about 18 months ago, a little over. It was August 2018 when it came out. And it was early warning because remember, I'm always early on these things, and it creates a problem because people think I'm a quack when it doesn't happen right away. But this was inevitable. You could measure it, and I like measuring things. And so what he does is he takes the Robert Shiller PE ratio, which goes back into the 1800s. And here, there's something wrong with the bottom time scale. This is 29. This is where 1930 starts, right there on the first dead cat bounce. And this is 1932. However, this data ends, obviously, in like July of 2018. So this went a lot higher into February 2020. And what he does then is he takes the Shiller PE and he adjusts it for the profit margin that the companies in the S&P 500 are making. And you get a margin adjusted PE ratio. And what you see is that it was at record highs, even higher than the peak of the stock market in 1929, suggesting that the bubble was much bigger than the stock market bubble of 1929. Now, another thing that he tracks is he gets the data on if you had invested on any particular day, what would your returns over the next 12 years be, your annualized returns? And here's the data. So if you invested on this day, that would be your return. If you invested on this day, this would be your return over the next 12-year period. The reason that this data only goes up to here is because you have to calculate it 12 years back. So in July of 2018, the data that was available is what investors had received over the previous 12 years. So had they invested on that day, this was their percentage return. Now, if you had invested at the bottom of the 1987 stock market crash, after the stocks lost a bunch of value, your returns would have been over 20% for the next 12 years. Conversely, if you had invested right at the peak of the NASDAQ bubble, right at the beginning of the year, end of 1999, beginning of 2000, your returns would have been zero for the next 12 years while you sat on this very scary roller coaster watching your investments lose 50%. The S&P lost 50% and then bounced, and 12 years later, you got back to break even. Now, if you take that and you take his margin-adjusted PE and you flip that margin-adjusted PE upside down, what you see is this incredibly high correlation where it has pretty accurately predicted what you're going to make over the next 12-year period. And there are these periods of time where there's a big divergence, and it says that there's something going on that's wrong. A bubble is happening. And you see that right here, we were doing that. And this went even a larger divergence. And now it has all, it's reverting right now. But what this is saying is that if you invested in July of 2018, your predicted return was that you were going to lose greater than 1%. And this kept on going down to February 2020. So you were going to lose big time had you invested in stocks. FedWatch, this is new. Total assets, and so this is total assets. The Fed has a balance sheet. Assets minus liabilities have to net out to zero, and this is the total assets of what they bought. Their liabilities are the currency that they create, the credit, because currency is credit, and that's all it is. So this is what percentage of America that the Fed has been able to purchase through counterfeiting. They just type trillions of dollars into a computer. Here's all the trillions they typed in the last 3 weeks into a computer, and they buy assets. And those assets, so it's about to reach $6 trillion. By the end of this week, it probably will have topped $6 trillion. And by the end of this month, I wouldn't be surprised if it tops $8 trillion. Which is a tenfold increase from where they were back before in 2008. It was at about 0.8 trillion. And now they're going to be at 8 trillion. So in those total assets, a percentage of them, the largest percentage of them, is U.S. Treasury securities. So U.S. Treasury, what's a Treasury? When you buy a Treasury bond, what you're buying is a future stream of taxation. So when they do a treasury auction, they're auctioning off their future taxation. That's all it is a claim on future taxation. And so we pay taxes out in the future to pay the principal and the interest on those bonds. And so if you look at the scale of what's happening here compared to QE1 and the months and months and months it took to do QE1, QE2 and the months and months it took to do QE2, this is like 9 months, this one. And this is like a little over a year. And this occurred over a few years, QE3. This move is as big as in 3 weeks. So they're ramping up the auction of future taxation is enslavement because you have to work and pay taxes in the future to pay this off. And so they're ramping up their rate of enslavement. And it's about to top $3 trillion at this point that we owe them, the Fed, who bought this through counterfeiting. And they did it. I mean, it's crazy. This is the rate at which they're doing it, compared to history. So this is a change in millions of dollars. And what you see here is the scale of their operations as far as the change week to week. And you look at what's happening now. This is just absolutely tragic. I know I smile and I laugh at some of these things because if you don't, the only thing left is to cry. I want to welcome the 1,461 new subscribers. Please make sure you hit that thumbs up button and send this video to everyone. Something I forgot to mention yesterday. Night before last, we passed the 500,000 mark of subscribers. It's a big milestone for us. I want to thank everybody that's out there that's helping us by passing on these videos. Viewer feedback. This is for day before yesterday. And Upside Down question mark says, it's called the American Dream because you have to be asleep to believe it. And that's a quote from George Carlin. Native American says, remember the Wonder Years TV show of the 70s/80s? I lived in the UK, but for me, that series of growing up showed up the best of America. That show filled living rooms with ethics and sound judgment. Now we get fear and manipulation. The dream is a living nightmare, and this is so true. I spent 2 hours last night looking for something to watch because I just didn't want to go back to work after dinner, which I usually do, but I just wanted to relax and watch something. And 2 hours on Apple TV, on Netflix, on Amazon TV, just looking for something that has some redeeming value to it because I don't want to put crap in my head. There's only so much room for stuff in here. And what I want to do is fill it with inspirational movies and shows on ethics, morality, overcoming adversity with grace. I want to do things that make me a better person, and I don't want to fill it with a bunch of killing and death and shows about getting away with it, committing some sort of crime and getting away with it, whether it's a moral crime or whether it's a legal crime. John, so if you could put in the comments something that you suggest that I watch, because I find myself watching the entire Twilight Zone series for the 5th time and West Wing for the 4th time. So Jack Brown, shortly after I began stacking slash hedging silver and gold 3 years ago, I redefined my definition of both integrity and intelligence. You score top on both counts, having the intelligence to question the logic of the current financial system, the current paradigm, and the integrity to act on your belief for years and years when the majority challenged your belief. And when gold and silver are going down, that did happen to some extent where people challenged that because they were trying to think I was just trying to sell stuff. But no, what I'm trying to do is follow what's going on and disclose it to as many people as I can. So question the current monetary system and spread the word. Yesterday's video, the deadlier than coronavirus. Banks are deadlier than, central banks are deadlier than coronavirus. Fact. I absolutely agree. Thank you. Stephen, reminds me of a scene from The Big Short. In The Big Short, he said, for every 1% that unemployment goes up, 40,000 people die. That was in The Big Short. I'm sure they did a fact check before they did that movie. And that's what I was talking about. When your income is lowered and you have less access to goods and services, your lifespan is shortened. And if you didn't watch that episode yesterday through all of the math that happens about 3/4 the way through it, that simple high school math shows that if the economy shrinks because they shut it down, that it could be the equivalent of killing more than 20 million people as far as our shortened lifespans. So the actual reaction to the coronavirus could be deadlier than the coronavirus. And what we need to do is the government should be sending everybody, we should be mobilizing the textile industry to make face masks, as many as possible, as quickly as possible. And that eyewear that I showed you, that stuff is so cheap, the government could, they retail on Amazon for $1. You could government could get those for probably 15 cents. They could send out those, a dozen face masks, a dozen sets of gloves. It would probably cost them less than $1 person with postage. So you're talking $330 million is the only cost there to send everybody in the United States and then make it illegal to be anywhere in public without a face mask. And countries that have done this, where they've done just the face masks, not the gloves and eyewear, have flattened that curve and reduced the risk of coronavirus overwhelming their hospitals, which increases the death rate. Mike, I love your front page of your website and the updates it provides. Could you refer me to someone in the UK who has the same standards as this? No, I can't. We're the only ones in the world. Cameron spends night and day doing this, and he's totally obsessed. Meme of the day, but first, get my book and thank you for sharing these updates. I really want to thank everyone that sends the URL. Just email it to anybody you can. So here's the meme. We've got 3 different movies, and you are here. This is our reality right in the middle. We're between an old movie from the 80s called Brave New World. It's also a book. And the book 1984 and movie. And Idiocracy. If you have not seen Idiocracy, this is the most brilliant, dumb movie you have ever seen in your life. I don't usually watch dumb films. And this is one of those films that's sort of, it's dumb, but the story it's telling is absolutely brilliant and so true. So thank you very much for watching. We'll see you next time.